A few weeks ago, Joel gave us a great story about getting backstage at AC/DC. So the band's been on my mind recently. Used it as inspiration for today's title. Highway to Dell. We're going to talk some Dell. We're going to talk some more earnings. You had Gap, Nordstrom, MongoDB, Zscaler, SentinelOne, tons of earnings stock to break down. Not to mention some crazy volatility in DJT. We'll discuss that as well. We also have PCE data coming out at 8:30. We're going to get some more inflation data. Should be a busy morning. Let's go ahead and get pre-market prep started. Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, S&P 500 SPY trading down 1 cent here, or 10 cents here. Pretty flat as we head into this inflation report. Again, 8:30 PCE data will come out. Qs trading down a little bit more here, about 0.2%. We'll go over to the Dow. Dow in the green, hanging on barely there, but flat as well. How's the old Bitcoin doing? Bitcoin trying to get back to that 69,000 level, up a little bit here. But overall, we're flat as we head into this morning. Again, it's been kind of a volatile week. We've had a couple red days in a row. We haven't had that a lot this year, but we will discuss that as well. Let's go ahead and bring in my man, Joel. Joel, how we doing?
It's Friday, and AB, I like the title. I like that title. You didn't even sneak that one in on us. Where's Triple D? He should be rare.
I was laughing out loud when he said that because I didn't even look at the title yet, and then he said Highway to Dell. I love that. AB on his game, A-game today, going in the weekend. He won another parlay last night.
No. I don't think after that one I'm gonna win one for another. I don't know, say next quarter. I think you can only win one of those a quarter at most, if not once a year. But I mean, guys, like I said, we've got a lot to discuss this morning. Should we start with earnings?
Yep. Oh, you know where to start. Start with your title.
You started it for us.
Come on, man.
We're on the highway to Dell.
All right,
highway to Dell.
So we talked yesterday about Dell's,
Canadian Idol right here.
No Dell's stop sign, no speed limit.
Okay, now we got to get back. Get us back on the rails here.
We had talked yesterday just about how incredible Dell's. We looked at the monthly chart, just showing how crazy really this move in Dell had been, because it's not a stock that tends to have these moves. It's not an Nvidia. It's not, a stock that typically goes up like 100% in a year. There were some signs yesterday with the stock closing down 5% before the report that people were, let's just say, wary, maybe a little bit nervous of this report coming out. So the report itself, let's get to the numbers that we can talk about the implications of this. So EPS came in at $1.27, missed by 2 cents. Okay, basically in line there. Revenue $22.2 billion, beat by $550 million. Pretty good there. But then the company actually, gave some warnings and kind of guided lower. Expects gross margin rate to decline about 150 basis points. And so this is, it basically had the bar set as high as any stock that we've talked about this earnings season. And it did not live up to that bar whatsoever. You're seeing the stock trading down $30 this morning, down 17%. And it's just, I don't know if I've ever seen the winds taken out of, or the wind taken out of the sails, like out of a move so quickly here. You look at the chart on the monthly. This is 2 days ago. We were trading at what, $180, and now it's going to open at $140. It's a huge haircut in just a couple days.
It's unbelievable. And this is one of the craziest reports you'll ever see after a stock runs up 70%. this year, and talking about a stock that's up like 40% going into the quarter, and the stock that was up like 20% in 4 days ahead of the quarter, sold off ahead of the number yesterday as profit takers came in, worried that the stock wasn't going to live up to expectations. I tell you, folks, it not only didn't live up to expectations, they guided down. I mean, you've got a stock that Michael Dell has been bragging, even showing the golf ball with NVIDIA, and everybody's going to buy a Dell because we're going to have these AI computers and everything. And they guide down? How do they guide down? That's like crazy. I would have thought they blew it. I would have thought they'd blow it away and the stock still might not go higher because expectations are too high. That's what we talked about yesterday on the show. Just expectations are just simply too high, which we were absolutely correct. The stock was 181 when we were saying that.
Talk about that.
I mean, we were worried, very worried about this. They guided down. Like, it wasn't a big guide down, but you can't guide down when your stock goes up 30% ahead into the numbers and it's a PC maker. I mean, all of a sudden it's like, now we got to think about, well, maybe, just maybe, everybody's not buying an AI computer tomorrow. Maybe because they're not ready. They're not there yet, the AI computers. So upgrade cycle could still be coming. I'm not saying Dell's story is over here, folks. But I'm saying I'm very surprised it guided down. Like, I think everybody was waiting on that call. The stock was trading at 150. And everybody's waiting, oh, they're going to guide higher. And they guided lower. And then they hammered it. And the stock went down, I think, to like 136 or something. It's bounced off those lows. Mm-hmm. What to do with it at this point in time, because I think Dell is still a buy at a certain point in time. Like, I liked it back at 110. I said that on the show. I don't think it's going to get back down to 110. I think it gets down to 120. I do think there's going to be an AI PC upgrade cycle. But, I argued on the show yesterday, maybe HPQ, it could close the gap. HPQ trades 8 times, Dell trades 22 times. They're both PC makers. Do you think NVIDIA is not going to do a deal with HPQ? They don't exclusive with Michael Dell. So maybe there was the play, and that obviously was the play. Short Dell, buy HPQ. And I mean, boom, you just made a huge amount of money. Maybe you start thinking about, if Dell goes down to 120, maybe the upgrade cycle eventually comes and, I can sit back and wait. But wow. And maybe they just come in and buy the dip because people are still going to be thinking, well, it's coming, even though this next quarter is not going to be great, it's coming. But I just cannot believe they got it down.
Wow, there's so many things to talk about here. The first thing is just going back to the pre-market action yesterday, where this thing was trading over 180, right? 181 at 182. And you're thinking, this is, if you have a target, it's something like 180 and it's trading in the pre-market. We always say, yeah, it can continue higher, but in this case, it didn't. The other thing I want to point out, and is really important, is we talk about the opens. After you faded from the pre-market high, your opening tick, 178.80. High of the day, 178.84. So if you were, whatever your position was off the open, you knew right away, within seconds. If you were long, you were dead. If you were short, and it's one of those things where you had the wherewithal to, like, I'm going to put a stop up a buck higher, or let them come back through the open. They never came near that opening print. So a couple technical things here. Dennis, you mentioned 120. I'm scoping 130 here. And the reason I'm scoping 130 is I'm looking back just in the middle of May, you had 4 lows in that area. So that's what I'm looking at. And you got to be hesitant to say the pre-market low of 135.26. Got to be hesitant to say the low is in, because did you look at CRM yesterday? Once they cracked that pre-market low, they didn't stop selling. So couple notes there.
Lots of thoughts here. So just with Dell, there is underneath demand here, folks. So I don't know if we're going to, I don't know if it's going to be a CRM where it just continues to go weaker, because they are viewing this as an AI stock. I think, there's going to be this upgrade cycle to PCs where we get these AI PCs and people are going to upgrade to them. I just don't know how close it is. So if you got time, you're sticking down in your long-term portfolio, I think you might be happy with it. I also think if you stuck HPQ maybe in your long-term portfolio, might be happy with it. It's hard to time this, though. The quarter was terrible, really, considering how far the stock had run, and the guidance wasn't any good considering how far the stock has run. So rightfully so, getting beat. It deserves this beat up. The question is there, light at the end of the tunnel here? Yes, there is. I think investors will see the forest through the trees. I do think the dip is more likely to be bought than the CRM dip. I'm going to tell you why on the CRM dip too, why it continues to go down. Let's get the MongoDB because let's just talk cloud stocks all together here.
I was going to say the last thing I was going to say about Dell is just kind of, I guess, on the positive side. So Dell's AI server business, they made $1.7 billion on that in the quarter, which was more than double from the previous quarter. So quarter over quarter revenue just from the AI server business more than doubled. That's pretty good growth when you're talking about 100% growth over a quarter. But the problem is the stock was basically up double too in the same time frame. So a lot of it might be priced in, but they're saying the backlog for those machines increased to more than 30% quarter over quarter to 3.8 billion. So like you said, there's underlying demand for the stock. There's also underlying demand for these AI server, machines and services that Dell is providing. So like, I think that will be the growth driver for Dell long term, not just when the PCs have better chips in them, but the server part of their business. And we've seen what the server business, like cloud, server business can do for other stocks. Microsoft, Amazon have basically grown over the past 10 years exclusively because of Azure and AWS respectively. So, if Dell can kind of carve out that niche in terms of AI server space, then I think, long term, like you said, this could be just a buy and hold in your long term portfolio. But the problem was the stock had kind of priced a lot of that in heading into this report. But let's go.
I think the dip gets bought. I do. I'd love it down at 120. It's wishful thinking, though. I don't think it gets that low. And I think it's already getting bought, even though the quarter wasn't good. I think I'm with AB. There's a lot of revenue streams coming here, server space, everything. So, I mean, it's going to be a big part of AI. I think, the dip probably gets bought, but I want to be the first one here. I'm not want to be the first one.
Last thing, and then we'll move on. Dennis, remember you were talking about the straddle, and it was
22 points. I mean, it's more, so it's down more. And actually, I tried to buy the dip at the straddle last night, and it did pop a little bit, and then I ended up losing some money there. 28, not much, but I lost I think a buck or two. It was, I think, 22, and I was like 146. It bounced off there the first time. It did bounce right off the straddle price the first time, and then it's continued. Obviously, after the guidance came out, it was game over. Like they were going to hammer that no matter what.
All right, we'll move on to MongoDB real quick here. So MongoDB, geez, I mean, we're sticking with the losers, and again, similar to Dell. You had MongoDB closed down yesterday, 7% heading into this report. Some people taking profits ahead, maybe a little bit nervous about the report. Let's get to the numbers real quick, and we can talk about the outlook here. So EPS came in at 51 cents, which beat the 40-cent estimate. Sales came in at $450 million, which beat the $440 million estimate. But then, the company, again, weak forward guidance, not about what you did last quarter. It's about what you're going to do the next few quarters. They gave full year, fiscal year 2025 guidance that was below expectations as well. Stock get absolutely hammered, trading down $67 this morning, about 21%. And again, pretty similar to Dell, just in terms of like a few days ago, you were trading at 400 in the 400s, and now you're looking at a $250 stock. So big haircut here in MongoDB.
Cloud stocks, we talked about them yesterday, just getting absolutely hammered. The separation happening in tech is amazing to watch because you had cloud that was just flying high for so long, and it's been a bad year for cloud stocks where tech has still been rolling. The AI trade's still been rolling. We know Salesforce, we talked about it yesterday, breaking down to 2-year lows here. MongoDB, that's a huge breakdown, and it's doing the same thing, breaking down to basically where we were in the beginning of 2023. So giving back a year and a half of gain, stock was over $500. I mean, there's a dozen cloud stocks. ServiceNow yesterday, absolutely hammered. CrowdStrike going to cybersecurity. Spinner was pointing that one out. It got hammered yesterday. Salesforce really did a number on anything to do with cloud yesterday. They just came out with their selling shoes on, and that was it. What I found interesting was Kramer had a very interesting piece on Salesforce.com last night. And I tell you, we've been giving a lot of love to Kramer, absolutely deserved. He's got somebody on his team working there that has given him some incredible information, I tell you, because He's really got some, interesting opinions here lately. He kind of turned on Salesforce.com last night. He has been the biggest bull in Salesforce forever. He's really good friends with Benioff. I mean, Benioff's on there, it seems like 20 times a year. And he turned on him yesterday. And he said, I don't know how big AI is going to be for the cloud stocks. He was arguing that maybe even AI is going to compete with enterprise software. And I'm like, holy crap. If that's the case, then, that's, very interesting. And I don't know if I'm full on that. Like, obviously, Benioff doesn't want you to believe that because every Salesforce commercial, we talked about this yesterday with Matthew McConaughey in there, is talking AI. He wants you to think of Salesforce as an AI stock. Kramer argued yesterday that it might not be. And that's an issue. That actually, enterprise software, AI might compete with enterprise software. And I'm like, I never considered them competing, with enterprise software. That you got your Chat GPT, you don't need to go buy, some of these, use some of these Salesforce products as much as you did before. I mean, if that's the case, then there's problems here because all these stocks trade at nosebleed valuations here. So I don't know if that's going to be proven correct. Maybe everything is going to be an AI company. There's going to be AI in everything here, but not everything's going to be like NVIDIA, where it's just tech goes just because. And I think you're seeing that separation this year, and that's why cloud's having a bad year, where AI's had a phenomenal year.
And I think that's what it is, Dennis, is that everything will be implementing some form of AI and in its own way, not necessarily be an AI play, but it'll come down to like, what are the companies that are more effectively, more efficiently implementing AI solutions into their business? And you have the ones like Salesforce, where it's still maybe going to take some time to figure out and realize where exactly AI will increase these efficiencies and thus hopefully boost earnings, versus your NVIDIAs, your SMCIs, where it's already boosting earnings and those fundamentals right now through sales demand. So again, like, I don't doubt that Salesforce will be quote unquote an AI play at some point, just because the company, like basically any other tech company out there, will be using AI. It's just at this moment right now is not seeing the benefits brought by AI that other companies are. That's my take on it. And
I think it's just not like they're not seeing. I mean, Dell isn't seeing the benefits yet, from that quarter, and all they talk, Michael Dell 4 days ago flipping the golf ball over. They're not seeing that much benefit from it yet either.
It is. I said that the AI server revenue went up 100% quarter over quarter. That's a benefit for the company. It was just less than the market was expecting. So.
And obviously that server revenue isn't big enough here, or they wouldn't be guiding down.
Correct.
You got the one portion of the business going up 100%, the AI portion of it, and the rest of the business not doing, obviously losing, or they wouldn't be guiding down. So, I mean, yeah, it helps a portion of their business, but how much of that business is servers? Obviously not enough.
But did you see how low they took this, Dennis? I mean,
MongoDB? No, I didn't.
Yeah, we are $15-16 off the pre-market low. They took it to $226.99. I think you got to. I mean, if you're hoping to get it in at that level, then I think maybe you pick another level, because it bounced off that. I just was looking before I looked at the pre-market low. I couldn't even find any monthly lows, but I found a weekly low at the 238 level. Now I know that's only $5 away, so I would keep an eye on that. But I would say, just from the way this thing got hit, the way it has been selling off, I mean, I think you should maybe find buyers between that 238 and 226. Wide open on the upside. Also, if you look at the shorter term 15-minute chart, it's pressing. It's actually, it's hard to look at a stock that's down $67.50 and say it's in a little bit of an uptrend. But you do have some buyers really over the last hour and a half coming in and saying, holy mackerel, I could buy this thing in the 240s. So let the dust settle. But man, I really think it's going to be hard to get back down.
That happened the previous night with Salesforce too, where they washed it out. The stock bounced in the pre-market because you got the buy the dippers saying, I got to get in here because they're going to come and buy this dip. And then it opened in the regular session, and the institutional traders said, no, we are selling it. And they hammered it all day pretty much. So I don't know. There's separation here happening, you know,
Yeah.
in technology in itself, rotation in itself. Cloud is massively out of favor here, and it's fairly sudden for some stocks. You know, like ServiceNow. Like talk about that move yesterday. 3 days ago, this stock 5 days ago. People say it 3 days ago. Dennis, you're wrong. It was 5 days ago. 5 days ago, this stock was literally 20 points off its all-time high, which is pretty impressive, you know, like for where cloud has been going. It just lost 150 points in what? 7 sessions? I mean, yesterday they didn't even say anything, Joel. This was down 12% just because of Salesforce. What's going on in cloud? Maybe Kramer's onto something here. Maybe these aren't the AI plays that we think they are. Maybe Kramer arguing that AI might actually compete with some of these companies here. Something's happening. There is separation happening in tech here, and it's wicked.
You see this VeriSign chart, VRSN?
Yeah, it doesn't look good.
In
No.
Snowflake?
Snowflake's a disaster. Snowflake is an epic disaster, and its valuation's higher than any of them. And obviously cloud stocks as well. So, I mean, you know, they had the report. They popped at $15 in the report, and they were just all over it with their selling shoes. We suspected they might sell that rally because I said there's just so much overhead supply, so many bag holders in this thing now that they come in. I didn't think they'd sell it that viciously. It was 180 after hours that day. You don't see it on the chart because it never even opened near there. Down to 139, making new lows. Cloud has problems right now. I think you got to wait until you start seeing, you know, that turn and the stock stop trending down here. There are no touches for me right now. And the main reason is that the valuations are all really high. Why do I want to go pay whatever? What's Snowflake's valuation? Let's just do a fun exercise here. Go to your trusty Benzinga Pro, open up Snowflake, go to your details, look at the valuation. It is trading at 263 times earnings, 15 times sales. Now do NVIDIA, who is in the pole position and absolutely killing it. And they hate NVIDIA.
I think
NVIDIA is trading at,
42.
It's trading at 34 times sales, which is kind of scary, actually, and 42 times earnings now. It's gone. The NVIDIA valuation is very stretched. It wasn't like that 2 months ago or a month ago. It's just gone so stretched there, but it's still not 283 times earnings. I mean, that's price to sales ratio is like, holy.
I think
that's kind of crazy, but
the takeaway here, it seems like, is if you're trying to buy, you know, tech stocks and companies that'll benefit from AI, there was a moment where it felt like you could just buy anything, you know, even if it was, you know, wider out on this web of AI, and it was like maybe an AI play and it was still going up. Now you have to get a little bit more choosy, and it's not just this industry. Where you're seeing this kind of, you know, effect take place where it's really paying to be choosy. I want to transition here to the retail space because we've had a lot of retail companies report earnings the past few weeks. And, you know, some have been great and some have been absolutely terrible. We've really only talked about stocks that have gone down on earnings today. So let's bring up some ones that have done well.
Sure.
Gap Inc. has joined now, like Abercrombie and Fitch and American Eagle, as these retail companies going through a major resurgence here and seeing that through sales. So Gap last night reported earnings. We'll get the numbers here. EPS came in at 41 cents. The estimate was 14 cents. So almost tripled up on EPS there. Revenue came in, or sales came in at 3.39 billion, beat the 3.29 billion. And the retailer raised guidance following strong performance. The stock is now trading up 23%. And again, you're seeing a lot of separation in this space where it's not just like super strong consumer, all retail stocks are trading higher. It's been about half and half, where some have been getting hit pretty hard and some have been trading higher by a lot. So, you know, to me, it's like showing some pretty interesting signs of the economy, saying it's not a terrible enough environment to where if like your company's doing well, you can still get some good sales numbers, report a good quarter. But if you're not doing that well, the stocks are getting hammered, and we'll talk about a few of those as well.
It's just retail separation. Again, the same thing that we just talked about, cloud versus AI right now. It's retail versus retail. And what we were talking about yesterday, off-price retail versus full-price retail. And what you were seeing is the Kohl's and the Nordstroms, the Macy's, like not doing nearly as well. The Macy's report was fine, but, there's definitely separation happening here. Kohl's absolutely murdered yesterday. They murdered this stock. And Burlington, BURL, the exact opposite, the off-price retailers. They sell the same brands at half the price. People are coming in there. Maybe it's the shirts that aren't selling, but they're still getting those brand names. That's where they're going here. Gap is still, you go in there and stuff's
in
cheap.
between.
Yeah. It's not like, where they were, you go in there and the stuff's not super expensive. It's trendy too. And, Abercrombie and Fitch has been going pretty good. AO was going pretty good until yesterday and they hit it, but then it came back down too. I mean, there's these trendy brands that just, defy gravity. And obviously we've talked A&F on this show for the last year and it's been one of those brands. Gap's kind of coming back. The brand, the trendiness kind of coming back. You've got to watch those consumer trends because they go and then they're hard to stop here. It was kind of, you could see the Gap. It's been coming back here for the last year. It actually looked good on the chart going into the report here too. I had a little bit of stock into the report because I kind of like the setup here. I sold way too early after the report. I thought it got, up to the expected move and that would be it. But, it's continued another $2.50 since I sold some. I like the setup into the report. It actually looked really good in the report.
AB, pull up the dailies real quick on this one because you got a nice look. You got some nice confluence here, so I could give you guys a level to lean on. Back in just a little over a month, back in March, you put in multiple highs at the $28 area. Let's just call it $28.50. I see 3-4 highs there. What do you go to in the pre-market trading? You go to $28.33. I mean, we know when they run. I'll say I would look at that level. Boom, 28.5. I'd give it significance. Blows through that. Even if it blows through that, let's say, and then goes like to 30 and then comes back down and can't hold that level. So right now, I mean, it's up $5. It's only 70 cents away from there. Traded pretty good volume, but just that level just pops out on the dailies to me. After it, that's when they had its big run from 19 to 28 back last year. So keep an eye on that one, folks.
2 minutes to PCE. It's going to be market moving. I'm probably going to go to the background here in a minute. Okay. Remember, keep an eye on the TLT. It's your lie detector test for these. And remember, the IWM moves the most off of this. So, you're looking at S&Ps. You guys are all S&P focused. On the numbers, look at IWM. It's telling you a more story because those are the interest rate sensitive stocks.
And then on the flip side from Gap, you had Nordstrom. We've talked about this effect of consumers potentially trading down right now. That means more affluent consumers bypassing stores they would normally shop at to go for something a little bit cheaper. Nordstrom reported earnings yesterday, not as great as Gap. The EPS came in at negative 24 cents, missed by 17 cents, revenue of $3.2 billion, beat by 20 million. But the outlook for 2024 was a little bit worse than expected. And I mean, so Nordstrom also has the kind of discount brand as well with Nordstrom Rack. And I don't know if you guys ever go into those, but I love Nordstrom Rack because it's basically the same thing as a TJ Maxx or a Ross, but it makes you feel like a little bit, it makes you feel a little bit more classy. But I mean, really, like, you can buy a pair of dress shoes there for like $30-$40, pants, shirts, you name it. Like, I'm a big fan of Nordstrom Racks. But again, like, overall, the company might be dealing with some of this trade down effect here at its flagship stores. And, I mean, just looking, and this is what we were talking about, how much separation there is in these retail stocks, where some are trading at their 52-week highs.
Okay, we got 30 seconds.
I'm going in the background. I'll be back.
I see Jonathan in the background. I don't know if you want to grab him at all. Boom. We got some algo jumpers here. We're up near the highs.
Real quick. We're looking for the medium forecast for PCE is for it to grow 0.2% in April, year over year, 2.8. So those are the numbers we're looking for. 0.2%, and then core PCE year over year 2.8. PCE year over year, we're looking for 2.7. So those are the expectations going
Okay, it's
in.
light. It's a first move. They're saying it's a little bit light here. We get a pop. Now we're green, making new highs on the session. Limited resistance here. Yesterday's high comes in at 52.78. What they're seeing out of the hop, they liked it a little bit. Let's see what any revisions in there. Pulling back still. Can we stay unchanged on the session? Aaron, you got the numbers yet?
Waiting for it to pop through here on Benzinga Pro.
I think it's light.
Yeah, it's looking light. Okay, here. It should be coming in any second now.
Okay, limited resistance here. Yesterday's high is 52.77. You had that.
All right,
all
right, core PCE year over year comes in line, 2.8 versus 2.8 expected. Month over month for April comes in 0.3. So all in line so far, exactly in line. Shout out to the people making these lines. They're like the Vegas odds makers, doing a good job today. Basically all in line. Core PCE price index month over month for April came in 0.2% versus 0.3 estimated. So that number comes in slightly light. The rest come in exactly in line.
Good enough.
Expectations. Good enough for me, Joel. It's good enough for the market.
All right, let's look at where we got a bid here. We also have the bonds trading up about a third of a point here. I noticed that when the market sold off yesterday, the bonds kind of hung in there. So I thought that was a good sign for the market. Also, we want to look at the IWM, see how that's traded. That's catching a little bit of bid. So that's what you wanted. Now green on the session. I mean, in line is good enough, right? So this takes the old, okay, well, we may hike. Well, we're not going to hike. Well, we're still going to pause. Doesn't do anything to, really say, we got to go higher again. So this is the number they rely on. We also got some personal income data, correct? That was supposed to come out at the same time.
Personal spending, looking for
personal spending.
Personal spending came in at 0.2%, which was lighter than the expectations of 0.3%. So that's great news for inflation if people are spending a little bit less money than expected. And we've talked all show this week about how there are inklings now. There are signs that companies are cutting prices and maybe, so I'm looking at I think when we're talking CPI and PCE 2 to 3 months from now, barring, gas prices going up a bunch, I think there's a good chance you see these numbers continue to come in. And again, wouldn't be surprised now if we're talking about rate cuts in September. That's just my prediction.
Oh, no, get out, because we still got big inflation data coming out next week. We have the PPI and the CPI.
I know, but I'm saying in 2 to 3 months. I'm not talking about this month's report. I'm saying that you won't see the changes companies are making now in prices reflected until a couple more months down the road. So again, that's just my prediction, is that we're seeing inflation hopefully coming in a little bit now, more so because we had inflation come in a lot. And then this year we kind of ramped back up a little bit. And I think
we don't, just because inflation is coming down, that doesn't mean you got to automatically, turn and start lowering interest rates. You want a period of stability, right? As it comes down. So yeah, these are good numbers. You know that the PC is the preferred one of the Fed. You have other numbers coming, but it's a little bit of slowdown in the personal. We're not slowing down. Look at some of these retail stores. There's not a slowdown here. It's just keeping
certain pockets of slowdown.
I think there are.
American Airlines was an eye opener, so that the traveler is not quite as busy. There's pockets of slowdown. I think we're putting the cart before the horse, worrying about interest rates going down. But again, we're just dependent. All we can do is take the data that we're given. The data today was not hot, although core PCE year over year was up 0.1%. So it wasn't, not hot either here. TLT detector, lie detector here, it's not moving much, folks. It's not like we're ripping a buck or two. We're up a little bit. So this market still, I'd say, guilty before innocent here on this rally. We've obviously been selling off the last couple of days. You've got some profit takers in this market here right now. We're not, clear skies making new all-time highs. So I think a little bit of guilty before innocent here. I'd be cautious chasing this rally here this morning. Keep the TLT on your screen. As long as TLT holds green, market probably be okay. If TLT starts to roll over, then be cautious. So I'm just cautious. I'm not necessarily coming here saying sell everything here. this numbers, that interest rate cuts, aren't coming anytime soon. AB, they're probably coming here. I just don't know when. Let's bring Jonathan Corpina. I want to know what the institutional trader is thinking here right now too, because Jonathan's got a lot of institutional customers here. We obviously get a good feel for retail on this show, so it's nice to bring somebody like Jonathan in that gives us a feel for the institutional customer. Yep. What are the big boys doing?
Jonathan Corpina. Let's go ahead and give him our special pre-market prep welcome and see what Jonathan's been thinking about this market.
Jonathan Corpina, working at home today, senior managing partner at Meridian Equity Partners. Let's get right to the most recent data, Jonathan. Let's get your take on it.
Gentlemen, good morning. Thanks for having me on. Just to clarify, working from home for now. We'll be going into the stock exchange soon after on this beautiful Friday. But stayed home. Use this as an excuse to stay home and spend some time with you guys. But awesome. Looking at the economic data, pretty much comes in line of what we were expecting. I think this is what we really needed. This the activity that we've seen in the market, the pressure that we've seen in the market, all the headwinds that we've had. I think we needed to take a little bit of a breather today. I'm in the camp of Dennis. I don't know if this holds on all day today, right? We've seen a lot of risk off recently. We've seen risk off come on Fridays. There's still a lot that we're going to have in front of us next week. So we might see a quick pop in this market. But as we get to the last trading day of the month, I don't know if we're going to be able to hold on to that. Sometimes, I know it's not quarter end, but we do see window dressing at the end of the month. There's not enough muscle in this market today to window dress any of what we've taken off in the last 5 or 6 trading sessions. So I think today's number was more of let's try to stay out of trouble, which we did, and let the market kind of do its thing for now, because we certainly have seen a lot of pressure on this market recently.
So what are you feeling like? What is the institutional trader like? Again, I just saying, we're a retail show, talk to a lot of retail traders here, but you're talking to the big boys.
Yeah.
What are they feeling on this market right now? Because it's been a tricky market. Like we see the S&Ps very near highs, the Qs very near highs, but the IWM has underperformed here for 3 years here now. China's still a mess. And then you've got cloud stocks starting to roll over. It's like if you're in the right stocks, you're a hero right now. But if you're in the wrong stocks, you're a zero. It's a tough market. You can't just buy anything blindly here. What's your institutional customers? Where are they focusing and what are they saying?
You're right. I think it was you who tweeted out yesterday that you're happy Nvidia's in your portfolio to help all your other longs that aren't.
I got some bad ones in there.
Aren't performing well. So I think what we've seen overall in the market is that you are going to be either right or wrong, right? But in the longer term scope of things, we've done this two steps forward, 1 step back mentality. And I think talking to the institutional clients that we have, they look at this as opportunities to buy on the dip. Now, you're not going to time it perfectly. There's still a lot of momentum and volatility that's out there. But when you see some of these sectors and some of these stocks that have had the performance that they've had, and you get these consecutive pullback days like we've had over the last 6 days, there is some attractiveness to the overall market that's here. We have a lot of economic data coming up next week. We continue to talk about interest rates. We've got political headlines that came out after the close yesterday that's going to potentially have an impact on our markets. So yes, there's not a lot of rosiness in front of us, but it seems that the market always seems to kind of power through these negative headlines because it has plenty of time to digest it. There's plenty of runway running into some of these negative headlines or negative dates that we have on our calendar coming up. So from an institutional point of view, we continue to see strategic buying, and we don't see panic selling. There has been zero panic selling in any of the customers that we talk to. It's more of, let's just get to the summer. Let's see how things play out. If the market pulls back, we're going to start buying a little more. If the market swings down, we're not going to feel like there is this panic to sell, because as we've seen in the past, the market will move lower and then bounce back up again and bounce back even higher. Look at the charts in the S&P. You did point out before IWM has been lagging behind for the last few years. It has been, right? Like that really needs a significant push behind it. I don't know what that's going to be at this point to get it more in line with some of the other indices that we track. You look at the VIX. I like to kind of throw the VIX into that mix of things of really showing if there is a correlation in our market. I think it's a very good indicator. We've seen some pretty good volatility in the VIX even this morning as that number came out. But VIX is probably trading exactly where it should be considering what we've seen in the market activity so far. So I think the next few weeks as we get through June is going to be interesting.
Boy, you used an interesting term there, panic selling. When's the last time you seen some panic selling? And has there been a lot of panic buying lately? Managers that are missing this market?
We certainly have seen more FOMO panic buying than any panic selling. Last time we've seen panic selling, we got to go back to the end of September of 23 when the markets really started to kind of take a turn, and we were getting towards the end of the year and people were really uncertain how the year was going to end. We started to see that then, but then again, that turned very quickly. We do see a lot of volatility in this market. And when stocks move higher, they move quick. They're starting to move quick. So I do think institutional customers, they are price sensitive, but not overly price sensitive. They've made the commitment to own a stock. They made a commitment to add to their positions. And within some price parameters, within some percentage points, they certainly want to get back into it. So I definitely have seen institutions try to grab stock as it's on the upward move, because I'll go back to it again. We've seen this market performance every time there's been a pullback, and we talk about what is the catalyst, what's going to be the pullback. We see the pullback, we get the 3 to 4% pullback, and then the market takes off again. We've kind of conditioned ourselves to try to wait this out and pick the perfect timing. You're not going to pick the perfect timing. So when you start to have that feeling, that conviction that this is your price where you want to get in, you got to grab it when you can.
Okay, we also have an event going on today that you mentioned. You have the MSCI rebalance, not quite as big as some of the other rebalances that are going on. You're coupling that with like the end of the month, right? Which has been a surprising month so far. Tell us what traders and investors can expect from that rebalance, and then squaring up the books at the end of the month.
Yeah, so I think the rest of the day now is going to be pretty quiet, and Dennis, as we said before, I think we might see a trail off in the market as we get towards the end of the day. But at the end of the day today, there is a large MSCI rebalance, almost about $70 billion moving back and forth on the close today, and some of that starts to get priced in a little bit early. This is one of the bigger ones that we've seen over the last 4 quarters, and this gives an opportunity for some of the global indices that are out there to change positions, right? They are additions to the index. There's deletions to the index. We've had some corporate takeovers. We've got some price changes. So you'll see a significant amount of volume on the close today. I think what we've seen in the past is that this gives portfolio managers an opportunity to buy or sell large chunks of stock with having little to no impact on that stock, right? So conceptually, if you've got a position in a stock and you want to sell 1 million shares, it's going to take you some time, depending on the float and the volume ADV of that stock, to get in and out or out of that. But when you have an event like today, it gives portfolio managers opportunities to really move a sized chunk of stock. So we do see a lot of momentum. We see a lot of volatility. We see a lot of volume today. And then it's kind of interesting to see when the filings come out in a month from now of who's sold what and who owns what. You'll start to see a lot of significant changes there because they use these opportunities. Next month we've got an S&P rebalance, which is a pretty big one that we get towards the end of the half year. So that'll be another opportunity. But today should be a real interesting close, and that's why after this I'm gonna keep my golf shirt on and go into the city.
Okay. All right. Just coming up on May, end of May, beginning of the June. 6 months will be the halfway of the year. What's your biggest surprise? So far in the markets, the way AI's grip things, and then kind of what's something that what is your biggest disappointment this far?
So yes, I mean AI has been a hot headline, and I think everyone's trying to grasp onto that in some way or form and try to hold on to those coattails there, right? You guys are talking about Salesforce and whether that what type of company are they, and are they becoming an AI company, right? So I think everyone's trying to find their niche within that, and that clearly has helped many companies that are out there. I think from an overall point of view, you look at the technology sector. Technology sector has performed well so far, right? We've had a pretty good sell-off the last few trading sessions here, but I think overall technology has done well. We've seen some surprises in there. We've seen some stocks that have underperformed, but I think we're going to continue to see technology to be on the upside there. And that one too, when you see that pullback, that's a great opportunity to get in. The one that I think might have some trouble in front of it, if you look at XLF, you look at financial sector, has had some pretty good momentum to it. Had a little bit of a pullback, bouncing up close to the highs now. I think with interest rates uncertainty, we talk about how these larger institutions are how they're able to make money. We continue to talk about exposure to commercial real estate and loans that are out there. We talk about mortgage rates and who's getting what rates and what loans are being given out to who. I think we're going to start to continue to see a little bit of more, not continue. We're going to see some pressure in that sector there. So as that gets towards the highs there, I think that's one to keep an eye out as we head towards the summer.
Jonathan, can we get to a market eventually where everything starts going higher, where everything starts to work? Is that possible? Because it doesn't feel possible in the last year. It's like something's working, something's not. Talk about ETF effects here too, because I've challenged this as well with so much concentration in from the ETF market, obviously, in just a number of names. How much effect does that have on the underlying stocks? Like I've argued that it has a significant effect that, ETFs, because, when they're launching, no, China's not sex anymore. You don't have like the launching, Baba and Baidu, but it's all the time. They're launching something with NVIDIA, something with Microsoft, something. How much does ETF effects really affect this market?
Yeah, I think there's clearly an attractiveness to ETFs from a retail investor, from a institutional investor, from a hedge perspective. There's definitely attractiveness to that. What it has done is it's gotten individual investors away from investing in individual stocks, right? And they're focusing more on sectors. We understand how the institutions then have to buy the underlying stocks to own that within the ETF, and how that all that structure works there. But I think we've gotten back to kind of like bundling your cable, your internet, and your phone into packages here, where we've gotten away from owning individual stocks. I think it has hurt the industry. I think it's going to continue to go in that route, right? We're going to continue to see launching of ETFs just because they are so popular. And it continues to work from a launching perspective, and it's clearly making money for the institutions that are launching these. But I think from a focus point of view, individuals have lost focus on individual stocks. But again, back to my original point, it's attractive because it's so easy, right? When was the last time you were able to own gold without owning physical gold? When was the last time you were able to short gold without having a retail investor be able to short gold, right? So there's opportunities that have never been out there before. That does attract additional investors who have been on the sidelines into the market to make it easier for them. And as even cryptocurrencies now, right? You can start owning ETFs and cryptocurrencies without owning cryptocurrency. So it's become a lower threshold for people to get in. I think it has somewhat watered down our overall investing strategies in the market.
Jonathan, I'd be remiss if I didn't ask you about this being an election year and a presidential cycle. And I know with a lot of recent events that we don't cover that closely, but I mean, you have historical precedents with presidential election cycles. This one, I don't know if they have a script written for, but just from the institutional viewpoint, standpoint, election year cycles, I mean, usually the market's up in the year of election. What's your take?
There is no historical correlations to what we're going through now, and I think that goes back to was it 2016 when Hillary Clinton was a shoo-in to win, and the polls had it all one way, and it all went the other way. I think all credibility in polls went out the window then. Heading into this year now, yeah, this can go either way. This can go any way. After the events of yesterday, try to put your finger on it. Is this going to, take Donald Trump's chances off the table, or is this just going to strengthen him? We continue to see, on Twitter, the fundraising records that are occurring overnight for former President Trump. There's a lot of uncertainty that's out there. We've got a incumbent president who is losing in some polls, which is not one that we've seen before. And then historically, the way the market performs during election years, throw interest rates on that right now. Like, what is the Fed going to do? When are they going to do it? Are they going to be forced to be sitting on their hands? Is there a unwritten blackout period that we're going to come up to? There's a lot of uncertainty that's going around this presidential election. I have no idea how this is going to turn out. I don't think anybody does. And I think if I could have my wishes, I would just like to fast forward the calendar to November 6th and just move forward, because there's going to be a lot of movement between now and then.
All right, Jonathan, it's been great to have you on. I got one final question, and definitely the most important of the day. Are those Rangers hockey gloves behind you?
Those are Wayne Gretzky game used,
awesome.
autographed.
Wow.
Hockey gloves. Is that this side? That's this side. Yeah. So my Rangers had a tough one last night, but we'll try to get them back on track Saturday night.
All right. Well,
still a series there.
If you're ever trying to, free up some room on that shelf and you want to get rid of those, let me know. I can find a home for those Wayne Gretzky gloves somewhere.
No problem.
Over here. But yeah, I mean, it's been an exciting series. Panthers, Rangers going at it back and forth. I mean, the Panthers, man, they're a good team, but so are the Rangers. So I'm rooting for Rangers at least in Game 6, because I'd love to watch a Game 7. I don't really have a horse in the race, but the Panthers were in the finals last year, right?
Yes.
So let's switch it. Let's switch it up. Let's get the Rangers in there.
Yeah, and
Rangers Oilers. I'll go for that.
Rangers are a very good team. They're a very deep team. They play such a great style of hockey. It's just fun to watch. It really is. And whoever makes it to the finals, obviously I'm rooting for the Rangers, but whoever makes it to the finals is going to be great hockey just to watch.
When was the last time a New York City team was in a championship? It feels like a while. In
a championship, the Rangers were in it 8 years ago when they lost to LA.
Okay.
That's the last time the Rangers were in the championship, and then prior to that was '94. You've had the Giants, right, who won their last Super Bowl in 2012.
Yeah. Have the Yankees been there since then?
I think the Yankees have been out of it for a while. We're not going to talk about my Yankees have been a while. We're not going to talk about my Mets. So
there's nothing to talk. There's nothing to talk about there, Jonathan.
There's plenty to talk about, but it's not good.
Not good.
So yeah, for such a large metropolitan TV viewership city, New York has certainly had its droughts, and conversely, it's nice to see sometimes some of these smaller markets make it into the finals and win championships. So we'll see how it all plays out.
All right, Jonathan. Well, again, senior managing partner at Meridian Equity.
What about the Nike shoe? Someone wants to know about the Nike shoe.
Julia Serving, Dr. J.
Mailman.
No,
that was Karl Malone.
That was Karl Malone.
That was Karl Malone. That's
before my time.
So that's Daniel Jones' helmet, and then we've got these are all Super Bowls that I've been to, and then we've got Julia Serving. I've got my kids go to TCU, so a couple of times signed TCU balls, bunch of exchange stuff over here that I've gotten over the years, pictures. So my wife wants me to kind of clean this up a little bit, a little too much clutter.
Looks awesome.
She's not going to be happy with this.
All right, Jonathan. Again, thanks for hopping on PreMarket Prep. Always a pleasure to catch up with you. We'll talk soon. Enjoy the exchange today.
Gentlemen, have a great day. Have a great weekend. We'll talk soon.
Yes, sir.
You guys thought we were going to get away from the sports talk, but
no, we were just saving it for Jonathan. All right,
it's slowly turning into a sports show. Like it's like the morph, like. It's like Tesla. Maybe this is, it was a car company. Now it's turning into the AI company. This is PreMarket Prep, the stock show, and it ended up as a sports show. How did that happen? We're slowly bringing it to the sports side.
we got to at least mention it. We're not going to get too deep into it or, whatever. But as I'm sure you guys are aware, the biggest headline, not just market related, but going into today is Donald Trump's verdict in the hush money trial in New York. Found guilty on 34 counts. You can, say what you think about that. I'm not going to give any opinions there. But we can talk the stock and the price action. And DJT, which of course is the parent company behind True Social, went down on the news. Went down about 10%, went from trading at $51, got down to about $44, excuse me, here yesterday afternoon around 5 p.m. when the news came out. But since then, and a lot like, there's been some kind of like prediction markets about Trump's chances of winning the presidency this year. And they've come roaring back. So the shares were down at $44 yesterday afternoon. Market shrugs it off, says, okay, well, now we don't care as much. Trading at $55, so up $13 from last night at 5 p.m. to this morning. We're now trading up 6.5% as we head into the open. So a lot of volatility here. All I'll say is the last thing is, to me, this is a GameStop. This is an AMC, a stock that is not trading with fundamentals, a stock that is so divorced from those fundamentals. You're basically just trading on kind of hype and momentum here. So I wouldn't be doing anything other than maybe, just kind of like a quick in and out trade for fun here.
It's telling you something, though, the DJT, and it's telling you that actually this verdict, which originally DJT getting hit was, like, oh my goodness, like he may go to jail, he may not, maybe he's not going to run, maybe there's going to be, it's telling you the exact opposite here now, that this is actually potentially good for Trump, which is crazy to think about, that he gets convicted on 34 charges here, and he's going to get sentenced on July 11th, but there's that sympathy vote that he is going to now, he was already getting a lot of that, but that this is a witch hunt, that this is just is rigged against him. It seems like half the US actually believes that, because half the people are voting for him. So I mean, it's going to be interesting going to the election. This is so much like just unfathomable to think, that he could end up going to jail and win the White House. I mean, I can't even and they were asking that question, CNBC, can he run? And he's like, absolutely, he can still run.
Yeah, I think
I don't think he's going to go to jail, but I mean, it's crazy to think about that he can run. I mean, you would think there'd be some law or something that says, well, if you're current criminal and that you can't run, but you can. And I mean, the DJT is telling you that this somehow is good for Trump.
If you're convicted of a felony, you can't vote, but that doesn't mean you can't run.
They're going to change that law after this, by the way.
So
somebody's going to change that law.
Yeah, and you can make a strong argument that this verdict is actually like a good thing for his election chances, because it gives him more fodder for the argument that like, hey, look, they're after me, and we're still going to come out on top, and Trump uses that stuff so well. So all right, just wanted to break down that price action here, because it is going to be one of your movers and top stories on Wall Street today. Real quick before we wrap, we got time to go to one more earnings breakdown.
Let's do Costco and Ulta. All
right, let's do two real quick then. We'll go rapid fire here. Costco trading down slightly, $5 this morning after reporting yesterday after the close. EPS came in at $3.78, beat by 10 cents. Revenue came in at $58.5 billion. That's for a quarter. $58.5 billion of revenue for one quarter for Costco, beat by $520 million. Costco is one of those stocks, though, that I think the market usually has a pretty good gauge on heading into the report, so you don't usually see a ton of volatility after the report. So trading down less than 1% this morning. Ulta, which had the bar lowered, before its earnings report a few months ago, the CEO, talked about growth slowing faster than expected. You see what the stock had done going into the report, going from 575 all the way down to 375. Well, that's going to lower the bar a little bit for the report. And so when Ulta came in with actually a pretty decent report, even though it lowered guidance, the earnings themselves were pretty good. EPS beat by about 25 cents there. Sales came in above estimates slightly. Stock trading higher this morning by more than 8%.
continues to be about the bar. I mean, that's
Yep.
what this market continues to be about. Ulta bar, like, to your point, was very low going in. The stock was down 200 points in the last 2 months. Say anything okay, it's going to pop. And, that's what we saw. That's what we saw in Ulta. Costco is just relentless. The stock is relentless. The buy the dippers on this stock are relentless. They don't often come in the first day, but by the third or fourth day, they're always coming in here. And they've already started coming in, actually. I mean, the stock is just, the company is probably the best run company, well, maybe one of the best run companies in the entire USA. Like, I mean, it's just unbelievable how well this company is run. And, it's always traded at the premium multiple, and it's always just continued to trade at that premium multiple. It's continue to grow earnings. The company is just a juggernaut in its industry, just a phenomenally run company. And, it's been a core great holding for a lot of people. Not me, because I've never stomached the 45 times earnings. I wish I would have.
They didn't have the crab legs last time I was there. So
At Costco.
Yeah.
I assume not.
So
at Ulta.
Joel's going short the stock.
No. Looking at the first, looking at the Costco chart, it's interesting because you did have a dip to 800. The buy the dippers came in, so you get a reset on yesterday's session where you had a low at 508.30. So it holds there. Let's see, go up, maybe test that close at 1534. But so far, pretty far off the pre-market low. The Ulta is a little bit trickier because you did pop over 430, pre-market high 433.54, but that's now $10 away. If you're just going to be a daily kind of trader and concentrate on your dailies for resistance, that comes in at the 430 area ahead of the pre-market high.
When I went to Costco on a Saturday, I said I would never go again, but I gave that as my, gauge of saying, look, this stock is a buy. It was way too busy to not be a buy. It was right here at the beginning of April, $720. Now it's at $815. So I didn't listen to my advice. I don't own any, but I hope
I never listen to myself enough.
Yeah, I hope someone did. I don't know. All right, guys, that'll be a wrap on pre-market prep for today. It'll be a wrap for pre-market prep on the week. Shortened week this week. We only had 4 days, but next week we will be back on Monday. Joel, who do we got joining us?
And just as you asked me that, I pull up and we got a good guest coming in on Monday. Maybe he'll talk a little bit about the T+1 to T0. Joe Saluzzi from Themis Trading Group. He'll be joining us on Monday.
We love Joe.
Tuesday. Ryan Dietrich on Wednesday. And we'll get back with Shakin on Thursday. We got another great week lined up.
Fun.
And yep, got a lot. So everyone have a great trading day. Looks like we talk about the weekend factor, right? The low for the week or the high for the week being made on a Friday. Well, that 52.30.75 looks pretty good here. So look for some bids on a pullback. Yesterday's high, 52.77, only $5 away.
Remember, it is the end of the month here. So to Jonathan's point, sometimes you get some crazy opens or crazy closes. So keep that in mind. Sometimes just having your order out there if you're trading isn't a bad idea too, because sometimes you get a gap up or a gap down. So just keep that in mind for trading today. Yeah, and have a great weekend, guys.
All right, guys, live trading will start up right now. We'll see you guys next week. Have a great and safe weekend. Peace and love, y'all.